All right, hey traders, this is Christian from Farmer's Tribeca Trade Group, and this is your recap for Thursday, June 28th. So, just going over the XLF after hours here, the stress test results that came out. Looked pretty dismal. The first couple headlines looked pretty bad. Goldman, Morgan Stanley, that was the first headlines that came out. And on Bloomberg, they come out, which let's see if I can bring up Bloomberg. I'm having a little bit of PC issues. They come out as red headlines. So Goldman and Morgan, they can't do any additional buyback plans and so forth. So they could still stick with, I think, what they originally can do, because they did announce that they have I think $5 billion was one of them. Yeah, $5 billion in boost dividends. So they could do some things. They just couldn't do as much as J.P. Morgan and Citigroup. So so that was the first headline that came out, and you could see XLF started to sink. And then they started to come out with the other headlines about some of the other banks. Deutsche Bank was the other one that was the only failure. They just kind of put Citi and Morgan Stanley and Goldman kind of on watch. But Citi, I mean, look at this, buying back up to $17.6 billion in boost dividend. I mean, that's a lot. I think if you look at the outstanding shares, right, the total float out there, I mean, that's a decent percentage of of what they're going to buy back. So same thing for Wells. So that was kind of, and I think even Goldman and Morgan have come back here a little bit. I mean, Goldman's kind of flat right now. Morgan is, what's Morgan? Morgan's actually up, and the other Morgan, J.P. Morgan, with a big buyback is up, and I think Citi, which I just went over, is probably one of the bigger recipients. If you look at the 1 hour chart, you'll be able to see that we're through. I think we're right at the top of value. We may have gone through it. We're right at the top of value, so we'll see if they can continue to rally tomorrow. Wells is the other one, which I think had probably the best reaction. You could see that's also through the top of the value. That's going to come into play for tomorrow, so we'll keep an eye on that tomorrow. But yeah, so I'll talk about what I did today. I played an XLF trade, and we went over after hours. I did basically lottos in XLF. I thought the risk for the banks, while I'm not a big, I've gone over in several videos that you may have heard me if you've watched these videos before, how I'm not really a fan of the banks because of multiple reasons, but every situation, when something is down 12 or 13 days in a row, the risk is to the upside. And I think that's what XLF, I think I calculated, was down 13 days going into today. The risk is to the upside. Were these things really going to go down much further after sinking 12 or 13 days in a row? So I played XLF to the upside. I have calls that expire for tomorrow, and I have monthly calls, which I was able to take a target at the end of the day. I mean, these are calls that I put on for 31 cents, took some off at 39 cents today, which is, a decent percentage gain. And then also, some of the things that I go over, in the trading room, if you're not a member of Tribeca Trade Group, there's a lot that I don't put on Twitter. There's a lot that I really don't talk about that I do in the room, because I have paying members, and they get a lot more information than I put out just in the videos. There's a lot more to talk about. But we went over a couple different trades that you could do in XLF, and talking about how you can dollar hedge with the stock after hours. Unfortunately, I don't need to do that because XLF is not up that much. But these are all things that we kind of go over, and strategy that we go over. And it's not just me. That we've got a really good group of members who've been pretty solid. I will say this, and I don't mind admitting at all when I'm wrong on something like that. But I thought we were definitely going lower this morning. The technicals looked to me like it was, had some pattern recognition yesterday, where I thought we were definitely going. I thought like there's a good 70% chance that we were going down to the 200-day moving average in the S&P, which we could still get down there. And again, I would rather not have that. But when you're unsure of things, and when things are not looking good, you make adjustments when that happens, and then if things start to flip around the other way, then you make adjustments to new information as it comes out. So, that's just life. In trading, you're going to be wrong a lot. So, last night's video, I was pretty bearish and thinking that we were going to have a couple more days, or at least another day of volatility. And things looked that way this morning. Things looked like they were going to break. And certainly Germany was down big. They were down at one point. The DAX was down about 2%. I don't think it was down 2. I think it was down a little bit over 1.9%. And it finished down, I think, 1.5. So not a crazy victory, but I wouldn't even call that a victory at all. But the DAX did not capitulate and kind of provided some relief. The put-call ratio is something that, again, these are all things that we kind of go over in the trading room, and with the help of members too, who are pointing some things out. But we went over the put-call ratio, and I can't overlay this in Thinkorswim because I forget how to do it. But this is the put-call ratio, and it did spike up here. And when you put this together, maybe I'll try to do it here. So these are a couple of things that we were going over earlier. And actually, my friend Spinner on Twitter pointed this out as well, that previously, this is going to be hard to line up perfectly, but I'll do the best that we could do here. Let's just zoom in one more time. But yeah, I mean, when this peaks, it just shows a little bit of risk aversion. And I think the last time that this happened, where we kind of spiked up, was on 5.3. So if you go to 5.3, which was basically here, we had a hammer bar in the 200 and we moved up. So when people really get skittish, it's a good, we got a peak. We didn't get as big of a peak as we got on 5.3. But you could see again, it looked like we were going to fall down here, and we came back and closed above the 200-day moving average and had a nice swing to the upside. So again, we didn't get quite as bearish with the put call volume, but there was definitely a higher peak than what we've seen in the last couple of weeks. Notice we got pretty bullish when the put call goes the other way, and there's a lot more calls than puts. So that was a good point to take note of today. Also, another member in the room mentioned today the 4-hour chart, which was really good. I didn't ask his permission to use his name, so I'm not going to mention his name, but was talking about the 4-hour chart in the S&P and said, we've got a chance to basically hold this support, and if we break it, then we've got some problems. He said, but it's basically not over until it's over. And we did hold that on again, this is the 4-hour chart. Not something that I look at too often, but he made a really good point about their support here. And we held it, and we reversed. We didn't get a crazy move to the upside, so it's still in the cards that we could get more volatility. And I think you just kind of have to take things while things are calm down today. It's going to be a process, right? So we went over a lot of examples today in the trading room about some of these big red candles. They've got to kind of calm down a little bit. So I think we got that today. We'll see if this low that we put in this morning will hold for tomorrow. I think odds are that I would think that tomorrow could be pretty good with the stress test results coming in decent. But also, I'll go through some single names and a little bit of some of the price action today in some names. But there was some decent. Finally, we've been getting all these analyst upgrades with price. Price target raises. EA was one that I think we've seen 2 price target raises. I think there was also a bullish note on Take-Two. So these are the kind of things that I think, and the reason why I'm bringing up these charts, they're good to kind of look for. Some patterns that you can kind of trade against. EA not as clear, but if you go back to Take-Two, we have a close above, actually a bullish, pretty much very close to a bullish engulfing candle today. So that takes out a couple days of price action, and I like this name a lot to the upside. I liked it about 2 weeks ago too, and it stalled out, but I still think this name gets back to the highs. So there's a lot of things like that. By the way, which I didn't talk about, Nike had some good earnings too. They moved down to the 50-day moving average. And look at what they're look at what they're doing after hours. They're up to 77, so that's good, and that should be good for the sneaker space. This was another chart that I put out earlier today. Was talking about the strength in Under Armour. So there was some definite bright spots today where things, again, not every name is going to look perfect, and I think a lot of names still have a lot of work to do after some names really got pounded yesterday and just throughout the week, or even a little bit further back, like the industrial space, for example. But really nice move here in Under Armour. A name that I'm long as well that I've been kind of patient with in some January calls. Look at Teva making a nice move as well. And that just punched out here. So we'll see if we get some continuation. Interesting, if you go to the 5-minute bar, it's there's some of the stuff almost like if you're not positioned in the right, if I was positioned in July calls in Teva, I would probably be panicking a little bit based on every time it goes up and it sells off. It did this on the open. I don't know, this last week, one day here, one day here, try to go higher here again, failed, try to go higher again, failed, try to go higher again here, failed. And then finally looks like it's trying to punch out and close on the highs today. So being in January really gives you the flexibility to kind of stay in a trade. Otherwise, I honestly, if I was in July, something like July calls in Teva, I would probably be freaking out and maybe would have even sold the stock. But when I'm in January, I could say, okay, it hasn't broken any support. It is acting really weird, but just give it a little bit of time and see if it holds the wait until the 20-day moving average kind of catches up with the price. So that happened, and Teva is a name that we've been seeing, call buying, several times in the last couple weeks. All right, a few other names. So then you start to kind of look at some other names, right? This was one name that we saw yesterday. And again, it's all about, I think, as I mentioned yesterday, I know I repeat myself a lot because I talk a lot in the trading room, and I forget what I talk about in the trading room versus at the end of day video. But URI, this is a name that we've seen call buying in a couple times. It is a counter trend trade. However, it's pretty beaten up in the short term. It's gone from a swing all the way from 173 down to 145. So we saw call buying a couple days in here, and today it took out version point of control, which is for me is a signal, because a lot of times we see reversions after we take out a version point of control. So I would keep an eye on this name. It did put in a nice hammer bar. So there's really no signal the last 2 days. It tried to get going with everything else and failed, but now it looks interesting. And then other names, which I was in Boeing yesterday, was a winner until it completely reversed with every other stock. But nice update, 1.5%, first green bar in a while. So this is another name I think to keep on your radar. I tend to look after we've had some volatility. I look at best of breed names. When everything's rallying and everything's going up, then you can look at a little bit more. Then I tend to look at more speculative names. But after we've had a decent sell-off and everything's had a nice whoosh down, I'll tend to focus on quality. That's why I was focusing. I still have a trade in Amazon. Amazon came back nicely today, where I sold short put spreads, or I sold put spreads, I should say. Those are bull put spreads. So that trade ended up working out. Again, had to kind of sit through this, which got a little bit scary yesterday. Names that saw option activity. An interesting name, I'll start here. We did see yesterday a name in this very similar space, material name. We saw EXP calls yesterday. 2,000 of the August 105s. Today we saw some in a nice looking trade. 4,000, sizable looking trade. $626,000 of premium. We also saw we did see some call buying, and I don't have every one of the calls up in the financials, but we saw a little bit of Citigroup calls today. not that huge. Well, this is 290,000. That was probably the biggest trade. Looks like some puts were possibly sold. We did see some XLF trades that went up today too. Um, there should be a bigger one in here. Maybe it was this one. Yeah, here it is. September 27 calls that went up for 83 cents. That's an opening trade. There was only 9,000, only 7,000 of open interest. They traded 11,000 on this block. It's a $936,000 trade. So nice trade there. There was also some Schwab calls today. There was a little bit of RSX calls that went up. STM calls. There was a nice there was a nice EA call spread as well. I forgot about this trade. And alley calls too, which we saw the other day. This is EA. Let's see, where was this trade? This was the 155, 175 call spread. So again, you kind of match this up with the chart in EA, which is one of the first charts that I went over. So that's a decent amount up there, but they're looking at September. So they're looking at EA to really rally and take out the highs. That's 155. I can't believe 175 is that expensive, considering how far up that is. But it is what it is. So that's a nice looking call spread. Again, really needs that name to rally and get going. But I think a pretty good looking call spread, and something that you have time on, right? So what did they pay for that? They paid about 286, I think, for that. 84, excuse me, for that trade. That's not a bad idea, I think. And we've seen a lot of, last year we saw a lot of those call spreads as well as in EA, and some of them, it took them time to get the trade to work. They had to actually restructure it 2 or 3 times. And I think they were I think those were June call spreads that they bought towards the end of last year. I remember that trade because I was in it, and I had to restructure my trade a couple times through this, and then until it finally got going. So I would say, just to kind of leave with today, analyze each situation, each stock on a case-by-case situation. Like I said, certain things are going to take some time. Baba had a nice day, but did not take. There was a little bit of call buying in Baba today, but it's got more to do. I don't think I would jump into this name yet, because it's basically that's not. I don't think that's a buy signal. If you were to do it, maybe you would use yesterday's close as your stop, which is right around the 200-day moving average. So as long as you're disciplined, you could try that. But I would wait for something a little bit more appealing like that, like the Take Two trade that we went over. This one's also intriguing to me. This BZUN came all the way back to yesterday's open. It did not get above there, but I would keep an eye on that name as well. All right, so I think that's a long enough video for tonight. I feel like there's a ton of other names to go over, but that's good for now. I will say this, as you're kind of being patient and writing names down that we've seen call, good call activity, waiting for the right, for your trigger to go off, for you to kind of go long a name or take a position in a name. Be patient, and I think you can operate in a much more clear head when you have less positions on. You're not anchored to wishing that the market recovers and goes back up. And then also, same thing from what I said in the beginning of the video, being able to kind of change your mind as you get new information, and really helps. Again, I thought we were really going to go lower today, but you kind of have to take. Oh, here's something that we did that we went over today. I knew there was one other thing that I wanted to go over. This is kind of the same blueprint that I have every time. To quote one of my Yankee favorites, Yogi Berra, it's like deja vu all over again. Here's my plan basically. Every time that we get a little bit of volatility, is to watch for the VIX to go lower. It's a little bit of a checklist. IWM usually leads us higher. IWM, it took a little while for that to get going. It did not lead us higher, but it did finish in the green. Also, for whatever reason, biotech sometimes catches a bit as well. And then finally, option activity is a great indicator when it's quiet and nothing's going on. Institutional investors are not there. When people start buying, And I thought today was pretty good. I thought there, people were taking advantage of some names that were down a little bit. So that's a great indicator. So those are the four things that I go to every time that we've got volatility, and it's the same plan. The VIX will start to go lower and sell off instead of really ratcheting higher. IWM is a good indicator as well. It often leads, and then option activity, which was what we look at every day in the room. All right. So thanks very much for watching. Have a great night. See you tomorrow.